Folks, I want to talk about my number one, my favorite pre-market indicator. Now, this is the indicator. This is my favorite indicator that I start the day off. And the reason I want to show it to you today is because it's doing something very powerful and it's giving us a very strong indication. I think it's going to blow you away when you see this. But I want to explain it. I want to show it to you. And again, I usually look at this indicator before the opening bell or after the opening bell. There's really not much point to looking at it during the market hours. And again, I do most of my critical analysis, and most professional traders do their analysis before the opening bell and then use that analysis to trade during market hours. So I want to show you right now one of my favorite indicators, why it's important, how it's important, and why you should use it. And I usually talk about it quite often, but I haven't for a few months because the markets have been just roiled by this COVID-19. But things are getting a little stable, and now it's time to look back at market internals. So let's jump in and do that now. So what you're looking at right now is you're looking at a chart of the S&P 500. It's a daily chart, and you can see here we're barely, but we are passing the 200-day moving average. That's what this mustardy, brownish colored line is. I don't know how it's coming through on your screen, but you can see my mouse here. I'm hovering over it. The blue line is the 50-day moving average. And it's irrelevant right now because the question is, are we going to go up, not below? So the first thing we have to do is break above the 200-day moving average and then break above the 50-day moving average on the upside. So the only thing we care about right now is the 200-day moving average. And the reason we care about the 200-day moving average, because the 200-day moving average is a barometer. It's the best barometer of whether the market is bullish or bearish. And if the market's bearish, you're not going to see a lot of institutional accumulation moving into the stock. So the good thing is we can see a good percentage of what's going on by looking at the chart. But remember something important. US stocks. Folks, this is a lot more important than you could ever imagine. Pay attention, write this down, take notes. US stocks are capitalized weighted. That means the bigger the stock, the more voting power or the more say it has within the market, which means Apple, Amazon, Netflix, these three stocks have more market cap than probably 100 smaller S&P 500 stocks. So again, the larger the stock, the more control or the more voting power, I like to call it, it has within the index. So, and it distorts this because if you're looking at 10 stocks and those 10 big cap stocks are going up, it'll dominate the weakness in 400 other stocks. So sometimes when we have these periods where we don't know if we're going up or down, if this is a true breakout or not, what we want to do is we want to look internally. We want to open the hood and look at the market from momentum levels. So we would go to bar charts or any other program you have, and we would go to market momentum, just like what we're doing here. Once we get to market momentum, we want to look at the S&P 500, right? We want to look at it apples to apples. So we look at the momentum levels on the S&P 500. They're loading right now. Bear with me. Give me a second here, and we should have them here very, very quickly. It's like Murphy's Law. Whenever you're looking for something, it takes forever to load. So big red flag. I typically look at the 50-day moving average and the 200-day moving average because, again, this takes all 500 stocks in the S&P 500 and gives them equal weighting. Now we're just looking at how many out of the 500 are trading above or below the 50-day moving average and how many are trading above or below the 200-day moving average. And what we found here is very, very interesting. Only 41% of stocks are trading above the 200-day moving average. So that means, technically speaking, 60 or 59% of stocks in the S&P 500 are still bearish because we have less than 50% of stocks trading above the 200-day moving average. So that's not a very bullish indication, and that's telling me the market may be coming back down to its main trend because you still have 60%, about 300 and something stocks trading below the 200-day moving average, and that's the main line. 200-day moving average is the long-term trend. But this is where it gets really interesting. We have 96.43% of stocks trading above the 50-day moving average. And that's really, really interesting. Let me explain why. Let's take a look at everything. Let me show you, and I like to look at a line chart when I'm looking at momentum levels, and I like to look at them on a max time period. And look at what we see here. Now we're looking at this over a 20-year period. This is a 20-year chart. This is a monthly chart. So this is giving us real long term. And look what we find here. Have you guys ever seen these levels before? Have you ever seen the S&P 500? Let me see if I can draw this for you here. Look at this. This is the highest level. This is the highest momentum level that we've seen in 20 years. Look at this data. Look at anywhere here. Notice, no matter where we are, it's higher here. This is the highest level. Look at that. Highest level ever in history. We've gotten 90%. We've gotten 91%, almost 97%. Almost every stock is trading above the 50-day moving average. So the long-term trend, only 40% of stocks are trading above the 200-day moving average. But every stock is trading above the 50-day moving average. And if we look at the chart, if we look at the S&P 500, and we've already determined that that's the highest momentum level in 20 years. And I would venture to say that's probably the highest momentum level over the last 50 years or 60 years, because the markets have been really out of whack. So it's really important to understand that the markets right now, in the long term, you're seeing a pickup in the trend. You're seeing a pickup in the short-term trend right here, this little bounce. Let me make this a little more palatable for you. Let's go to 3 months. So you're seeing a pickup in the short-term trend, which is this, but the long-term trend is still bearish because 60% of stocks or 59% of stocks are still trading below the 200-day moving average. So the S&P, if you're looking at it not percentage of share-wise, but if you look, not capitalization-wise, but if you look at it stock on stock, just stocks, 60% of stocks are trading below the 200-day moving average. And 97 are trading above the 50-day moving average. So here is what I'm expecting. I believe the 50-day moving average is going to cool off, and it's going to put more pressure on the overall market, and we're going to see the market move back below the 200-day moving average on the SPY. I think it's just a matter of days. I don't think momentum levels can sustain themselves, and I think after we see momentum levels this high, momentum levels are going to bottom out, which means you're going to see about 70, 80, maybe 90% of stocks below the 200-day moving average because the 50-day moving average is going to take them down. The 50-day moving average is the short-term trend. The 200-day moving average is the long-term trend. So when you're looking at the S&P like this over a few months period, well, it's looking bullish. It's trading above the 200-day moving average. But when you're looking at it like this and you're looking at it internally, when you open the hood and look at it piece by piece, it's a completely different picture. I mean, a totally different picture. You've got only 41% of the stocks trading above the 200-day moving average, meaning long-term trend is still really bearish, and 96.5% of stocks trading above the 50-day moving average, which means in the short term, they're way overbought. So to give you a picture, what you're seeing is a strong downtrend like this and a mild uptrend, which will curl down because you can't sustain this momentum level too longer. You just can't. It's impossible. So expect the market to cool off. And again, we're at the highest momentum level on the 50-day moving average that we've seen in history. Pay attention to this. And the key here is what I wanted you to get out of this is the difference between looking at charts, looking at momentum levels, and how momentum levels can give you an entirely different view of what's really going on in the market. And here's the other cool part. You can do this before market hours or after market hours. I usually do this. I usually check this indication or indicator about an hour before the opening bell. This is one of my favorite pre-market momentum tools, and I highly suggest you adopt it and make it part of your trading toolbox. Hope that helps. Folks, the world's #1 pre-market expert and I just cracked an all-new style of trading. We've developed a way to spot which stocks are likely to deliver the largest gains every single day before 9:30 a.m. opening bell. It's giving everyday traders the chance to earn up to 1,139.69% on their money. That's a huge advantage. And if you haven't gotten your hands on these trades yet, you got to do it. Click on the link below or the button at the end of this video to get them now.